Since society has become more commercial, people have not ceased their pursuit for money. This magical hand of money dominates this world and our lives as well. Wall Street, the landmark of finance. It is the heaven that many people want to realize their dreams. It is also the place where there are aggressiveness and brutality. It can make you become a rich person in just one night, and yet it can also cause you destitute. In 2008, the greed of Wall Street induced a subprime crisis. Apprehension swept the whole world. The stock plummeted. This is the biggest plummet that has ever occurred. Numerous investors lost their money. The tsunami of finance makes the global economy bleak. The loss exceeds hundreds of billions. 30 million people became unemployed. Since 1990, China's stock market has experienced at least 5 disasters. Everything was back to zero on the basis of 100 points. The disaster of China's stock market experienced was all over the globe. It was rooted from Wall Street. Why do normal investors lose all their money even just when something minor occurred, and become others' praise? And even the investment banks are victims. They are all gone. The oldest money market fund in the United States wrote off $750 million in bad debt issued by bankrupt Lehman Brothers. But some people are always the winner. Warren Buffett published a biography, From $100 to $16,000 billion. The annual return on investment rate is 23.6%. If it keeps going with the rate of 23.6% for 41 years, it is only $592,594, even until 2011. Can it really reach $16,000 billion? The rate 23.6% is just what it looks like. Buffett has a different understanding than that of ordinary people. This is the interesting point of financing marketing. It looks different than what it really is. The important point is to know the trends of the development of the society, have the help from professional investment teams, and properly with hedging strategies. Inflation is just like an invisible murderer that swallows our assets and wealth. In the United States, if there was not any inflation, the U.S. debt interest will be equal to its GDP, even though it is not able to pay its debt. It knows the essence of inflation. Therefore, the United States uses its debt to print and issue money to gain financial returns. It uses its debt to invest the money it does not actually own, which is what they borrowed from other people. It issues money more than enough to lighten its liability load through inflation. The only ultimate result is, use time to multiply the growing liability load, which is lightening through inflation. Take $1 million investment, for example. Assume the total amount of GDP plus inflation grows by 13% every year. After 30 years, its value will be $34 million. That is to say, the $30 million in 30 years is the $880,000 nowadays. In other words, the 30 million debts will decrease by 97% in 30 years. And that is equal to $880,000 today. And 29.12 million is evaporated. The uncertainty indicates opportunities. Our backup, selection of programs, and the concept of wise investing all affect our standards and actions of investment. Only by investing can you outrace inflation.